to DSU. So if we can just scroll to the next slide for the gifts of real estate and other assets. So what are they, right? So real estate, and if we're thinking about gifting real estate or any property or assets, is ultimately a great way to make that charitable gift to DSU and also have a residual benefit. So real estate, when we're thinking about, and not saying gifting you're necessarily saying gifting the house that you're currently living in, and once DSU has that, you're pretty much homeless. But I would say more around the instance for if you have a secondary home or a vacation home or maybe a rental property that you may not want to manage anymore, or even that vacation home you realize over time, and even in some cases values of timeshare, but that you realize that you haven't necessarily utilized, and want to be able to donate that or provide that charitable donation to DSU. That's another great way to ultimately look to provide uh, a cash value donation. I think when we're talking about other properties, that could be anything that has a sustained or appreciated value, such as, like, and it can be as simple as works of art, or cars, boats, antique stamp coin collections, you name it. There's ultimately a way to kind of package that and be able to provide that charitable contribution to DSU. When we're talking about real estate, and we're looking at like the different taxes, like capital gains taxes, which ultimately I think we kind of touched on, just looking at, equity, like, well, stock positions, with capital gains, and depending upon the value of the property, you may be able to have some benefits of donating that. But again, in the interest of time, I'll just hand it over to Adam to opine a bit more on some tax benefits for donating real estate.
Yeah, I mean, just like what you were saying, I'll echo those thoughts where it's very similar to like what we talk about with the appreciated stock, where the greatest benefit is being able to avoid paying that capital gains rate personally and shifting that asset over to DSU to, you know, to get the full value of that property to them, where you don't have to take the hit of having to pay the IRS tax. You can just shift the whole value to DSU to get the full benefit. And then, with obviously with real estate, especially the current environment, it's very common to see large appreciated values. And so now with the appreciated gift stock, we talked about, $3,200 was my estimated tax. With appreciated real estate, that number can easily be 10 times that number. It can get very large very quickly. So we're seeing a lot of clients utilizing real estate and other assets as a way to donate to charity now, because of the inflated values that we're currently seeing in things like even used cars, right? I mean, I know if anybody's tried to buy a used car in the past year, it's been outrageously expensive. So using those higher values allows you as the individual to get a greater tax deduction, and allows an organization like DSU to benefit more than a year where the values may be more depressed.
That's a great point. And again, just for instance, for both of these categories of gifts, when we're talking about estate planning and what we're leaving behind in your future, or afterlife for that matter, when after you've passed away, that these are things that you can leave behind as well. But ultimately, there's still benefits while you're still living. And so thank you for that, Adam. And I will hand it back to Justin.